So what we're going to look at here is not just a failed auction setup, but also the importance of looking at multiple timeframes, because shorter timeframes, whilst not always the best for giving you an overall view, if you have already got a view, they give you the opportunity to access that trade. So let's go have a look at what I'm talking about. What we got in the Bund is a poor value area from Friday. What I mean by a poor value area, this is a good looking value area in terms of it is nicely rounded out, trade has been distributed, volume's been distributed evenly for the day. This value area here, no rounding out, no clear distribution of value. So that's not a great value area. What you then should expect is with a poor value area is trade through it. And the reason you see trade through it is to try and establish where the most fair price is to trade. And that's what the market generally will do. Spend some time there and then work its way through, and we use the phrase repair that value area, and then the market can move onwards. So with that in mind, you're thinking to yourself, how can we play this? Now, we got an open drive early on, which took us straight to the value area high. You can be aware of that, but also be aware of this little ledge up here at 75s. So if you do get a push out of value, then potentially we're going to move through this ledge, and that really is just up through this small wedge here. So that was always a possibility. In terms of playing this to trade both sides of the poor value area, which is what you're really looking for, you need to be thinking about how can we get into this trade, or what will make this trade look likely. So for me, it was any rejection of this ledge and a failed auction. A failed auction occurs whereby you get a move outside of the initial balance, so outside of the first hour's range, and then a move back inside. So we drop back in, and you're then looking to play a trade down to the other side of the initial balance. And so for me, that's what I was looking for. I was thinking, right, can we get a rejection? How can we enter this trade? Now, this is where shorter time frame charts can come in very useful. Because you've already got the idea, you've got the context, you've got the larger sort of plan, you can then start drilling down onto your shorter time frames, which is going to give you more specific areas to get in. Now, for a failed auction trade, you need to see a close back inside the value area. Back inside the initial balance. Now, if you waited on a TPO basis for the close back inside, you had to wait quite some time, and you were ending up selling it down here at 65s. I do apologise, you weren't selling it at 65s. I was correct the first time when I looked at this. You were selling it down here at 59s. So you've got your confirmation of the failed auction. However, you've missed virtually all of the move, and we're almost at the bottom of the initial balance anyway by the time you get that confirmation. If you go onto a shorter time frame chart, however, what do we have here? You've got a nice shooting star on a 5 minute whereby trade has moved higher and then closed straight the way back at the same price. That price, 70s. So what you can do there, by using those shorter time frame charts, you're allowing yourself access to this trade. You're now giving yourself the opportunity. You've looked at this as a technical pattern. It makes sense to sell that. So you can be looking to sell 70, 69 area. That is basically the top of the initial balance. So you're selling it as it comes back in, but you're not selling this blindly. You're selling it with some context, with some reasoning. So this short-term candlestick pattern is giving you that in, letting you sell 70s. Yes, your stop's above the high, your stop's 78, so that's 8 ticks of risk, and you're playing it down towards the other end of the initial balance, and then potentially all the way through to the other side of value. So it's all about using those shorter time frames. What happened in the end? We did get the move down to the bottom of the initial balance. We then created a ledge as well, and we've spoken about ledges before. Created a ledge. Once the ledge broke, we then got the move straight the way down, and where did we stop? Right on value area low, down at 40s. So in terms of the larger idea, the trade worked out. We got the fill out of the poor value area. However, it's how you get into these trades, and using these shorter time frames to allow you to access a trade that you always felt was there gives you some of the best risk reward. If you wait too long for confirmation, you can often end up missing out on the whole trade, or certainly a large chunk of the trade. So those short-term charts, all about your accuracy, all about perfecting your execution. So once you've got an idea, move it down onto the shorter time frame and see if there's a way of getting into that trade, rather than just, otherwise it is just an idea and a broad view of what could happen for the day. All right, guys, I'm going to leave you with that. Something I hope you can take forward with you, something to think about. Don't dismiss those shorter time frame trades. I know that generally you are told spend less time on short time frame because it produces too many false signals. Yes, I agree. But if you've got an idea, if you've got a context to your trade, those signals can be very valuable in creating smaller risk reward trades, much more accurate and much more precise entry positions.